Madam, 25 questions irukku.
Friends, it's a pleasure to welcome you all for this special edition of PARDES. This is a Trialogue webinar on Foreign Exchange Management Act. Today's topic is very significant topic, especially in the current scenario. We have with us two eminent personalities. PA Sampath Kumar, a veteran chartered accountant, who will be moderating this session. On behalf of each and every one of you, I welcome Sampath Kumar ji for this Trialogue webinar. We also have with us a veteran banker, Srimati J. Lalita, with special expertise on foreign exchange transactions. The topic today will be steered by these two veterans towards external commercial borrowing. Doing business with own money has its own restrictions. Any financial management textbook advocates that leverage has to be done to some extent. Now, borrowing within India, FEMA is not applicable because it is an INR. But a cross-border borrowing, an Indian company, the term used is called eligible borrowers. They can borrow from abroad. Interesting aspect that attracts an Indian borrower to borrow from abroad is the rate of interest. Comparatively, the rate of interest may be competitive. In India, if it is 11%, an externally borrowed commercial borrowing may be at a single digit of 4% or 5%, or even less than that. But there's a concept called it is not only interest, so many other aspects are there. These are the things we will be discussing today. Let me hand over the session to Sampath Kumar ji to steer the session and hook on to us for the next 60 minutes. And in the same session, Zoho participants, you can type your queries in Q&A box. And also those participants who are logged into our YouTube channel, they can type your queries in YouTube. Both of that will be handled at the end of the session. So over to Sampath Kumar ji.
Thank you, Dr. Gopalakrishna Raju, and welcome, Srimati Lalita Madam. It's nice to be part of this web series, the 7th such webinar on this topic of foreign exchange management. And rightly mentioned by Dr. Raju, today's topic is on external commercial borrowings and trade credits. And Dr. Raju is a chartered accountant, company secretary, cost accountant, insolvency professional, valuation professional, and it goes on. The line goes on. Time may be insufficient. I stop with that with respect to Dr. Likewise, I interacted with the madam. She has got so much knowledge to share and a very experienced banker, as rightly mentioned, and in this particular branch of banking, foreign exchange. With this overall, let us go to the topic specific. The first one to Madam Lalita. I would like to know, if I want to know the implications and procedures with respect to the external commercial borrowings and trade credits framework, where can I get it, madam?
Hi, very good morning to one and all. It's nice to be here always, as ever, to be part of this webinar series with Dr. G.K. Ann and Mr. Sampath. Thanks for this opportunity. to talk about the most favorite subjects and the most important subjects for the Indian economy today. It's about the external commercial borrowings. Yeah, you can borrow from outside. That's external commercial borrowings to run your business. And there are certain purposes for which you cannot borrow. And anybody can borrow who is eligible to get foreign direct investment. Okay. But how do I know about the details about it? What does RBI say? What does FEMA say? I shouldn't violate any norms. So these are actually governed. All these ECBs and trade credits, these are all governed by subsection 2 of section 6 of FEMA. And what about the provisions, like any norms, any changes that they bring about? They are included in the regulations framed under FEMA. One is Foreign Exchange Management Borrowings and Regulations 2018, Borrowing and Lending Regulations 2018, and Foreign Exchange Management Guarantees Regulations 2000. But these two are notified with certain notifications also, like number FEMA 3R or something, and FEMA 8, respectively. But these are, these regulations have been given sometimes in 2018, and as per FEMA 2000 about the guarantees regulations. What about the updations? There are a lot of changes that's taking place. And who has to know about the updation? It's the authorized dealer, the person who is the institution which is facilitating this availability of ECB from abroad for the borrowers and the eligible borrowers who wants to apply for this loan. So what Reserve Bank of India does, this is the base. Apart from this, they keep on coming out with the master directions and guidelines. This is as per section 11 of FEMA. And these directions give the modifications and the modalities in which the ECB can be raised by the borrower through the authorized dealer. So this is under section 11 of FEMA, and these guidelines keep on being issued, and APs are being notified about this. So these are the instructions, and you get it in one word. If I to tell you, refer the master direction of Reserve Bank of India, which has been updated on 1st of August 2022 today. That's the latest one.
Thank you very much, madam. So the section 11 and the governing section 6 and other notification, and more specifically the capsule form in the master circulars of Reserve Bank. Thank you very much. And Dr. Raju, I want to go for this raising of the loan. Is there any specific precautions that has to be taken by me before going for raising loan from non-residents?
Well, Madam has indicated the document actually. It's always, whenever any FEMA related provisions with the Reserve Bank of India, we need not go every time to RBI, please permit me, please permit me. RBI has given a blanket automatic route. And that is one Lakshman Rekha is there. Within the Lakshman Rekha, we are permitted to borrow and use that funds, except for certain negative applications. For example, I borrow from abroad. I want to invest in real estate activities. I want to do real estate, like buying and selling of land. For that, I need funds. So I borrow money from abroad and do in real estate. Not permitted. It is called negative list. End use is not permitted. Want to do for manufacturing activity, permitted. Similarly, there is I want to borrow and repay immediately. In next 3 months, in next 6 months, I want to do. They say, like in Tamil, we call it as Maapula. Like that in our Madivelu will say Maapu. That Maapu la U you remove. It is called MAMP. So Maap. So what is MAMP? It is called minimum average maturity period. So if you take the regulation, when you borrow from abroad, it should be decent, and the lender also should feel that I have given money to India for its growth. So the regulation says the MAP is for minimum 3 years. Minimum 3 years. And of course, there are certain MAP where the minimum maturity period should be 5 years, 10 years, and 7 years also. But you can keep it as 3 years. And most important, there is a ceiling of all-in cost. What is all-in cost? All-in cost means your total interest cost per annum. They say benchmark rate plus 5.5. Benchmark rate is the interbank interest rate. So the foreign interbank interest rates plus 5.5% should be the total cost of borrowing. So beyond that, if ECB is a burden, it is not permitted. So we have to again go to RBI, please permit me. My all-in cost is very high, even though I want to borrow. Then RBI will say, why you want to borrow from South Korea? You go to Indian Bank, you go to Bank of Maharashtra, they will help you. So it's very, they have given one framework. Framework means one boundary. Within the boundary, you put the ball, bat, fielding, catch, everything you do. So if you cross the boundary, you are out. You go to RBI. So this is we can call it as precautions. So I have only given a highlight of the precautions. So right from borrowing, compliance, monthly compliance, then informing to the RBI. Whatever I do from abroad, whatever I borrow from abroad, I have to inform RBI. Inform only, not I need to ask permission. Through AD only I have to inform. So much of framework has been given. So that is why ECB means it is always advisable to have a FEMA consultant to your left-hand side and then borrow in your right-hand side.
So very nicely put in that there are restrictions or precautions that have to be taken, that too with the help of a consultant, so that the process can be carried out and implemented very seamlessly in an easy manner. That's one word I take it, Dr. Raju, from your point. Madam, there are certain acronyms, FATF and IOSCO. What are these acronyms mean, madam?
Well, when we talk of the ECBs, we'll be talking, during the course of this discussion, we'll be talking about who will be the borrowers, who will be the lenders. Lender has to be in which country. They should not be from a non-cooperative countries, which will be aiding terrorism and other things. So for that, what do we see basically is whether this is this particular country where the lending institution is situated is a member of FATF. What is FATF? FATF is Financial Action Task Force. So this is actually, it's an organization founded in 1989, somewhere way back, and all these G7 countries joined together and they formed this mainly to stop the criminals from going ahead with their illicit activities like money laundering, terrorism financing, and other things. And they want to prevent the financial system to become a part of it knowingly or unknowingly. So there are about 39 member countries, and India is also a member country, and there are members like two unions, like GCC and European unions, and other 37 members. They have something called a grey list and a black list. So the country from where you're borrowing, where is it? Is it a member in the positive list, or is it in the black list? Black list is only North Korea, Myanmar, and Iran now. Okay. So these are the countries with whom we can't do business, and we have to be very careful. There are certain rules and regulations that we'll not discuss now. But what is more interesting for us, apart from ECB today, is our lovely neighbor Pakistan has come out of grey list now. Grey list is where, You're in between. Anytime you will go to blacklist or you'll be treated as a positive listed country. So when I'm the Financial Action Task Force, what do? They keep on monitoring. Their delegates will be visiting the countries. They would like to know whether everything is in force, the compliance angle. KYC, AML compliance is there. They've come out with some 40 recommendations. So what is the action plan these countries are doing? That's why we have digitization today. That's why we have KYC AML policy of Reserve Bank of India. All that in force, and there are stringent norms for financial system entirely. So when you borrow, any relationship, any trade relationship or anything like ECB or anything, you need to see who is the lender, the lending country's position as far as FATF is concerned, what is it? We also say the country should be an IOSCO compliant. So when I say IOSCO compliant authority, what is this? It's an international organization for securities commission, basically. It regulates the world securities market. So positively, when I do business, when I go for borrowing from these institutions which are located in these countries, they have to be in the positive list, members of FATF and IOSCO. Like IOSCO is, as I told you, they are the regulator of worldwide securities market. So who has to be member? Not the country. Your country's market, the securities market organization has to be the member. Like your SEBI. SEBI is a member of that. So this is to ensure that the financial system, the money market, the economy, everything is in control. Everything is regulated properly by the government authorities, the central bank of the country.
Thank you very much, madam. The point simple what I take is the money cannot be taken from any Tom and Dick and Harry. It has to be through a recognized the country should be in the positive list, and the organization from whom I get it also should be in the positive list and complying with both the FATF, that is Financial Action Task Force countries, and as well the IOSCO, which is
the organization has to, it should be the lending institution should be registered and situated in a country which is FATF and IOSCO compliant.
Both. So the terminologies and the implications how I should take a loan, lending, from which source is also worldwide is regulated by these processes. That is the meaning of these acronyms. Thank you very much, Dr. Madam Lalita. Dr. Raju, now an Indian bank situated in India, whether they can participate in the process of issuance of rupee denominated bonds overseas in any particular specified manner also. Can you explain that?
Very interesting question. Actually, I need to give a background for this. In India, there is a concept called masala bond. What is masala bond? Masala bond is not issued in India. It is a bond issued by foreign companies abroad, but it will be in INR, in Indian rupees. So they will issue in INR. So people can subscribe from India also. People can subscribe. That is why it is called masala bond. We have Yankee bond, Doodle bond, like that. Various bonds are there. People can invest in American dollar, Singapore dollar, Japanese yen, like that. Now, to fund India, a foreign company will issue a masala bond. Indian banks will buy the masala bond. That means they will subscribe to that masala bond. From Indian banks only money will go there. And again, that money will be funded to India through ECB. Is it permitted? No, it is like a circular. So that is why the banks are not permitted to participate in issuance of rupee denominated bonds abroad. This is number one restriction. Number two, can banks and financial institutions, NBFCs, give guarantee? For example, there is a company in Sriperumbudur. they want to borrow money for their manufacturing purpose or working capital purpose. So they borrow Singapore dollar from Singapore bank. Now, can an Indian bank give guarantee to the Singapore bank? And Singapore bank will give the money to India? No, guarantees are not permitted. So, no guarantee, no investments by Indian banks. So, it seems it is very clear. So, that means round tripping is should be kept in mind. So, that is what bankers see. Why always this authorized dealer category 1? So, either if it is automatic route, you deal only with ADs. If it is a approval route, you go to Reserve Bank of India. So, bankers have to they will ask n number of questions. Actually, they should ask. Can actually will have a lot of experience in this. Right from their business, who are you, what are you, not only their Aadhaar number, everything they should ask about their product, from where they are importing, who is their importer, what is the relationship between you and the exporter there, all these things. So the genuinity of the business transaction is very, very critical.
Definitely, Dr. Raj, you made a very simple thing. If it is an automatic route, it can be through AD, and if it is an approval route, it has to be through the Reserve Bank. And I explained about the negativity involved with respect to Indian banks participating in rupee denominated overseas issues. Okay. Madam Lalita, whether a resident in India subscribes to the foreign currency designated or INR designated ECBs, borrowers, ECB participate, ECB foreign overseas centers or IFSCs are permitted in the ECB framework.
Well, ECB as the nomenclature means it is external commercial borrowings. So the lender has to be situated outside India, period. So a person resident in India cannot subscribe and get involved or participate in doing ECB lending. That's one. But there are certain exceptions, like where, for example, now we will talk about trade credit here. So up to 1 year, when the repayment is there, it's a trade credit, wherein up to $50 million they can get. So how do they get that? We know all this about buyer's credit, all of us have heard, right? Who will be doing this lending here? Here, the lending will be done by the foreign branches of Indian banks or foreign subsidiaries of Indian banks, apart from the foreign banks branches itself, right? So that is permitted. So that's an exception. So though, like for example, like to explain it further, a resident in India cannot subscribe to or participate in this lending pattern, ECB. Okay.
Correct.
But if I have a bank in India, say it's a bank in India, and I have a branch in Singapore, that Singapore branch can extend credit here to the Indian residents who is borrowing now from abroad. That is allowed.
Thank you very much, madam. And let us move to the next. Doctor, individuals can be recognized lenders if they are foreign equity holders or subscription to bonds or debentures listed abroad. Should such lenders be from FATF or IOSCO compliant jurisdiction? Again, so whether the question is pertaining to individuals and also about the compliance requirement.
Let us make one point very clear that we have 190 countries apart from India. Not all 190 countries are friendly neighborhood. Only Spider-Man is friendly neighborhood. So not all neighborhoods are friendly. So out of 190 countries, so the FATF and IOSCO compliant country, only the lenders, they can be individuals also, or they can even be foreign entities also. So they are permitted to lend to India. Now let me make one point very clear. Now the lenders they can subscribe to bonds or debentures listed abroad. For example, there is a company, they want to, there is a foreign entity, they want to lend to Indian company. Now, the company, they need fund. So they issue certain bonds or debentures. So rather than the individuals funding or lending money to an Indian entity, resident entity, they can subscribe to the bonds or debentures listed abroad, and that money will be collected and they can actually lend money to India. So all these are possible. So in one line, FATF compliant country or IOSCO compliant country is a mandatory one, plus the other routes can be explored. One or two I just want to share with you. Number one, I have already borrowed from India. My loan is very heavy loan. My rate of interest is 17% per annum. I am an Indian company. I have a borrowings of 180 crores at 17%. Now I want to minimize my cost. I want to go for an ECB at 5% per annum. Plus my all-in cost will become all the other costs. It comes to around 7%. So where is 17%? Where is 7%? So I save 10% on 180 crores means it is almost 18 crores per annum interest I'm saving. So definitely I'll go for an ECB. Now please note one particular point. There is a negative list. What is it? If the repayment of rupee loan, for repayment of rupee loan I borrow from abroad, that rupee loan should be a capex loan. That means it should be a term loan. Important that capex loan should be a term loan. So for a rupee loan repayment, I can go for an ECB. Now I want to go for a working capital loan. Already there is a working capital loan in India. To repay a working capital loan, I will not go for an ECB. So that is not permitted. So if you look at this logic, working capital loan is only costly. Term loan is not costly. Term loan will not be 17%. Term loan will be only 11% or 9%. So to repay a term loan, ECB permitted. To repay a working capital loan, no ECB. So therefore, bankers will ask all these questions. Edhukaga panam kondu vare? Why you want to borrow? All this. So to understand ECB provisions, first thing what we need to understand is, even bankers also, even though they have so much of guideline, direction, form game, etc., understanding business is fundamental. If bankers and the borrowers and lenders, these are the three people, they understand business properly, then ECB guidelines is easy to understand.
Raji, you have very nicely touched about the distinction between the repayment of ECB already availed through form of a term loan or with respect to the working capital loan, giving an example of 17% in your answer. Very nicely touched and explained. Let us move to the next one. Madam, in the case of, I have raised an ECB from foreign equity holder and utilized to generate corporate working capital or repayment of loan or whatever purpose. Can the repayment of principal of the ECB start before the completion of 5 years, madam?
See, here I think Dr. Raju had mentioned about the MAMP, the minimum average maturity period. That is something we need to take into account. Like minimum average maturity period is calculated like how much is the amount and what is the period for which it is kept with you, and how is the repayment starting from what date. So the average maturity period is calculated. What does the circular say is it has to be for ECB, it has to be for 3 years, MAMP. And there are different purpose for which the loan is raised. So the MAMP also changes 5 years, 7 years, 10 years, like that. Okay. Now, what relevance has it got with this repayment starting early? Can the repayment start early? Yes. But the minimum average maturity period has to be 5 years. So that MAMP cannot be below 5 years if I go for early repayment of the installment part of it. That's
So,
why
M-
I mentioned about the MAMP.
yeah. So MAMP cannot be less than 5 years in case a prepayment or prior to the scheduled
Yeah,
payment,
the early payment, you can say.
early payment
It's
comes.
starting, the early payment and the installment is starting earlier.
Okay. Doctor, there are so many ratios involved in this ECB process. One such ratio is the ECB liability to equity ratio. What does that mean, Dr. Raju?
Wow, it's a very interesting question. Let me give some example. When at the beginning of this session, I made one point very clear that own capital alone is not sufficient. We need to leverage our capital by borrowings. So if my own capital is say 20 crores, how much I can borrow from abroad? Now I want to borrow from US. I want to borrow from Canada. Second borrower, third borrower, I want to borrow from UAE in dirham. Fourth borrower from Singapore. Fifth borrower from Australia. All of them are very keen to invest in India. They want to collaborate with me because my technology is very new technology. So very good, I will borrow money. They say your consolidated ECB should not exceed the liability to equity. So how much I can leverage? You will be surprised. You will be surprised that this leverage, they have given a number of, this is automatic route. 1:7 ratio. That is 7:1. Liability 7 means equity 1. 20 crore is my own equity. I can borrow the equivalent in INR of 140 crore INR. So that you have to convert to the respective currency. Now you will ask what currency, which date. So that is why this form number ECB is there. This form number ECB 1 is there, form number ECB 2. Both have to be certified by a chartered accountant or a company secretary. And ECB, because every time when you want to take a, it is called, there is a very beautiful term they have used. It is called drop down. What do you mean by drop down? From there you are bringing it down. Until the drop down is 0, you every borrower in India to have a drop down, and bank will permit only when the bank will give you an allot a number called LRN. It is called a loan registration number. Through that only they will be permitted to bring money into India as a ECB. So every time when this money is brought into India, there is a form ECB have to be submitted to the banker, and the chartered accountant or a company secretary has to certify that with respect to the latest audited balance sheet, the equity. Okay, when I say equity and free reserves. Equity and free reserves, not revaluation reserve. So equity, free reserves, and accumulated profits. That is your equity. On that, multiply by 7. What is the limit? What is the actual ECB you are going to borrow now? Previously, opening balance ECB plus the proposed ECB put together. What is the total? To that, what is the ratio? Does it exceed 7? If it doesn't exceed 7, the certificate has to be, based on the certificate only, banker will permit to bring the money into India. So it's a very interesting model.
Incidentally, and more small rider to that, the gearing is 1:7. Will that not be financially a very heavy cost on servicing that prima facie? Ancillary to their question, 1:7. Will that not give too much of a financial burden on the borrower perspective?
Actually, your point is correct. If you look at the financial management textbooks, the cost of equity is always costlier, cost of debt is cheaper. So to bring down the overall cost of capital, otherwise called weighted average cost of capital, so it is always advisable to lever your capital.
So
therefore, especially when investors are coming to India, they will come in maximum two routes. Pure equity participation will be very less. That is FDI route. That is why ECB, who are eligible lenders, who are eligible borrowers, means any borrower who is eligible to get FDI, he is eligible to borrow also. When an Indian entity is eligible to get FDI, they are also eligible to borrow. Simple. And how much they can borrow? So it is only 1:7. And beyond 1:7, I'll see, when you have the capacity and cash flow to repay the interest, who is RBI and who is Government of India to stop? So therefore, who is the ultimate beneficiary? Outside person. India, a person who is lending to Indian company only is the beneficiary. So therefore, over lending or under lending, over leverage or under leverage, it is the borrower have to take it. So that is a business is always first. And banker will always question this. Banker cannot look at the guideline and direction and okay, 7 point is a chart organ certified, let us allow that money. No. Banker have to ask this question. Do you have the cash flow? You borrow this money and whether can you do the business? All these questions they have to ask. And they have to satisfy that they are capable to repay the money. Then only they will permit. All these are one-side compliance. Ultimately, banker have to ask this. A banker have to ask business questions.
It's a credit decision the bank has to.
Madam Lalita will supplement here how bankers will ask business questions.
It's a credit decision. We ask questions like we need to understand the business model, and ultimately we go by the regulations, norms, and other things. But to give it, extend it or not is a decision. No, it's whether we should go ahead or not. It's a decision taken by the bankers, and bankers will have to ask. If it's domestic or ECB, even if it is ECB, the questions will be asked. Mainly to understand what is the end use and how it's going to be used basically towards that end use for which they are taking the loan, and lot of things like it's something more than all rules, norms, and regulations.
it is the permitted overall norms, but the evaluation process of the lender is very crucial, as rightly observed by you both. If the feasibility is there from the bankers and lenders perspective, the norm can be 1:7. It can be 1:5, 1:4, 1:6.5. It cannot go 1:7. So the evaluating prudency of the banker and lender will take care of the flow. Thank you very much for the nice highlighting on that point. Madam, the FCNRB loans given to AD category 1 banks, whether that comes under this ECB framework.
Okay, here we need to know what's an FCNRB loan.
Yeah,
there are two things that we need to understand. It's an ECB. So the funds have to come from the external source, right?
Yeah.
So that's ruled out. One, to get this FCNRB loan, locally from a local bank or a foreign bank situated in India. What's an FCNRB loan? It's a ceiling permitted. It's a ceiling permitted, the nomenclature given, for lending out of the funds sourced by the banks under FCNRB deposit scheme. So it has got absolutely no relevance or no connections with this.
This a separate portfolio by itself by bankers. Yeah. Mobilized under the root, there cannot be any specific restriction. It can be used for the particular purpose. It can be any quantum. That's nice. Dr. Raju, can an eligible borrower raise simultaneously both foreign currency and INR designated ECBs?
Good question. An external commercial borrowing can be for capital purpose, can be for working capital purpose. Working capital purpose, how it can be funded, I will give you a model. Now, there is a risk involved in borrowing foreign currency loan. I'm exposed to forex risk. And all of you are watching the way US dollars prices are strengthening. So therefore, my cost of borrowing by conversion goes up. So there are deals. There are borrowing deals where the borrower wants the borrowing in INR. So it will ultimately, I am responsible to repay only in INR, not in foreign currency. Is it permitted? Yes. Number two, sometimes I will borrow from Canada or I will borrow from Germany in euro. I have to buy machineries in euro and import that. So why should I bring the euro to India? And again from India, I have to make the payment to the party in Europe or in Germany there. So I will have a investor. He will invest one portion in equity. I get that money. One portion he is going to give it as loan. He is called as direct equity holder. There is direct equity holder, indirect equity holder is there. Direct equity holder means minimum 25% he should be a shareholder in my company. He can also lend money. When he is lending money, he will say, let the money be kept in. Can I park that ECB abroad? Yes, you can keep it there itself. From there, you can make the payment. So this wire transaction you can avoid. But very important, you cannot keep the money there in current account. So the extent regulation makes it very clear. Please deposit that money in a certificate of deposit of a minimum rating, Standard and Poor. Their credit rating should be minimum AA minus and above. So in such kind of companies and banks, you invest that money, and until such time you are going to utilize that money for any payment, what you call it as foreign currency expenditure, pending utilization abroad. Similarly, you have to, whenever you have any requirement in India, so repatriate immediately to India. But someday what will happen, there will be a timing difference. You borrow the money, but requirement will not be there. So what to do? Will you keep that money, or can you lend that money to somebody? Can you rotate it? Can I invest in capital market? No, negative list. You cannot invest in capital market. You cannot invest in real estate. You cannot invest in equity of other companies. So then where will I keep? You have to keep it in fixed deposits. Now, can I encumber that fixed deposit? Now, people are so smart. They'll put in fixed deposit. They will create encumbrance on the fixed deposit. Again, take that money and utilize for some other nasty purpose. So that is also not permitted. So borrow, bring that money in INR. If it is not utilized, because utilization, this form number ECB 2 is a very interesting form. How much money you have borrowed, when did you borrow, from whom you borrow, what is the term, what is the rate of interest, what is the drop down amount, out of drop down amount, how much is utilized, how much is unutilized, unutilized portion where you have kept, this money where you have kept, whether it is encumbered or unencumbered. This has to be certified by chartered accountant or company secretary. So that is why a CA and company secretary has to first understand the business, deep rooted, rather than understanding the regulation, extent regulation, and ECB directions or RBI. If business is clear, then only you can certify.
Thank you.
Also CAs are required whatever we do under FEMA for bankers.
Nice. That's also that's a second time check by an independent process. That also a supplementary thing and a win-win situation for both the lender and to the professional concern for the benefit of the borrower. That's nice. Madam, is there any enhancement of the ECB amount permitted? There are delegated powers. Under the delegated powers, can that be done?
Well, it's like, there's something like an amendment, right?
Yeah.
It's amendment in the limit.
Yeah.
So it's allowed. But what we need to see is, like in one word, yes, it is allowed. But what we need to see is it doesn't breach the limit which has been fixed under the automatic route. And there are certain other parameters of the ECB, like, it's like an ocean. We keep on coming out with a lot of regulations, norms, and rules. All these guidelines should not be violated just because there is an increase in the amount part of it.
Sure.
But one thing is like we'll be discussing when we talk about certain guidelines and other things, you need to get an LRN from the Reserve Bank of India every time you avail an ECB. And before the first disbursement happens, the LRN number should have been allotted and we get it through the authorized dealer. So that LRN number, should it be changed? Not required, because only the amount is changed, subject to all other terms and conditions remaining the same and no violation of the norms.
You are saying, madam, under the overall limit permitted, the enhanced amount should fall within that premises.
Yes, yes.
Subject to other compliances. That's a very nice takeaway from you. Dr. Raju, the interest is involved during the construction stage of a project or some investment, construction time. Whether the interest paid can be part of the ECB borrowings?
Oh, it's a good question. Now, what is a project? For example, there is a capital expenditure.
Yes.
I am constructing a factory. The total cost is 150 crores, including land, building, permissions, furniture, the machineries, all this stuff. It will take some time, 6 months, 1 year, 1.5 years. Now, during this time, there will be an interest commitment is there. Now, this interest commitment, now my company is not in operations. Factory is not working. Now, where is the revenue? Where is the turnover? Where is the sales? Where is the expenditure? Where is the net profit? So, therefore, I have to pay the interest on the external borrowings, because out of 150 crores, 120 crores is funded by Singapore dollar or Australian dollar. Then I have to pay interest. I cannot keep quiet. So these interest I will pay from my capital. So that project has to have this approved, this project cost should involve that interest portion also. This is the first one. So that means my all-in cost normally prohibits. My all-in cost normally prohibits to pay interest from capital. But if it is during the project and my project cost involves, so therefore, while going through the application, the banker have to ask for the project report. And what is the breakup of the project? So this is very important. Sometimes there will be a guarantee fee also has to be paid. It is called ECA premium. It is called Export Credit Agency premium. So the guarantee fees, interest during construction, all this can be paid provided it is already disclosed. Number one. So number two, we have in IFRS as well as in Indian accounting standards, we have a prescription that until the asset is put to use. So we call it as ACP, acquisition, construction, and production. So until the asset is acquired or constructed, whatever is the interest, you cannot charge off to P&L. You have to capitalize it. So subject to the accounting norms and also subject to the disclosure in ECB form, I have to comply. So I will do one thing here, I will do one in accounting, not permitted. One thing in accounting, one thing in ECB, not permitted. So it is very, very important. So therefore, banker have to not only go by their ECB declaration, but also by their balance sheet accounting and disclosure also is required.
Raju, to supplement, it is not only to understand the business, but also the norms, governing norms of IFRS or standards have to be looked into. Then simultaneously in conjunction with that, this should also be complied with. That's the point you are highlighting. Very nice. Madam, you are highlighting about the end use, everything should be ensured. Any lending, end use is a very critical aspect.
That's what bankers see always.
Yeah, that's why I'm coming to that. That's why. Even as an auditor, when given whether end use is ensured or not, it's a standard question across board, across all types of lending.
Yeah.
I am having a reinvestment of expenditure. What is the past period I have incurred certain expenditure? Whether that will come and categorizable as an end use under the ECB framework.
Actually, when we were you're mentioning about the end use, let me just tell you about like where we can give it. We can get ECB for the working capital purpose or repayment of rupee loans or corporate purpose. There are a lot of things which are permitted. And it's easier to know where it is not permitted, right? So again, when you come to end use, the negative end use list is there. Like you can't, it's not allowed for real estate activity. Obviously, FEMA is very strict about real estate activity, right? And investment in capital market, the equity investments and certain other criteria, it's not allowed. So when this itself is not allowed, repayment of expenditure or reimbursement of expenditure, I'm sorry. So the reimbursement of any expenditure incurred in the past, that's not allowed at all for availing of ECB.
Oh, that's good. That's good. So likewise, as a layman, one can understand there is an end use, but permitted end users other than the prohibited or negative end users. The negative end use covers this type of past expenditure also. Correct,
It's not included and mentioned also anywhere in the direction.
That's his point, how it goes. Dr. Raju, the new terminology these days is a startup. What are the ECB guidelines applicable to a startup?
Very interesting. Maybe I'll make it very clear. Startups, they have to be first registered with the Ministry of Industry and Commerce. So there is a separate guideline for them, and they have to get it's an online registration. So then only they are a startup. So anybody who lights the kuttu velakku and opens a shutter, puts a name, they cannot be called as a startup. So number one is registration with the Ministry of Industry. Number two, the MAMP, the minimum average maturity period. Can they borrow loan from abroad? Yes. So their minimum average maturity period should be 3 years. And what is the maximum money they can borrow? Not minimum. Maximum money what they can borrow is only 3 million US dollars. So that means it can be maximum up to 24 crores INR or 25 crores INR, current exchange rate. So maximum Indian rupees they can borrow from abroad is equivalent of 25 crores. And all the other conditions they have to satisfy, like the negative list, they cannot use it. For equity investment in other companies, they cannot borrow. They cannot invest in real estate. And end use is one thing. And most important is the hedging part. So bankers have to be very, I don't know how much they are very strict in this, but hedging is, and if this is not done at the beginning level, at the statutory audit level, at headquarters level, it will become a very big nuisance for the headquarters. So therefore, at the banking level, at the branch level itself, hedging of the external commercial borrowing. There are two types of hedge. One is a natural hedge. I buy a machinery from Europe. So therefore, I have taken a loan from Germany. I have paid that money. Now I have to pay that money to. Now I'm exporting to European countries or to some other countries. So the money will come to me in euro. So euro inflow, euro outflow, I will manage. This is a natural hedge. So if natural hedge, sir, I have totally borrowed how much? 50 crore in INR in terms of euro. Anyhow, over a period of next 5 years, I will get 50 crore euro by export. So, you cannot tell this to banker. Banker will only agree natural hedge maximum 1 year. Next 1 year, 12 months, how much money it will come. Balance you hedge it. So, natural hedge is permitted only for 1 year. Beyond that, they have to go for the regular hedging. That means the hedging tools, forward contract. Again, forward contract will be only for 1 year. After that, they have to roll over. So, all these are to be done by startups.
Thank you, Dr. Raji. You have covered both startup and about a note on hedging also. Thank you very much. And Madam, what are the norms regarding the entities which are under investigation or where some restructuring is on with respect to these ECBs?
Yeah. Thank you. These two are two different, questions actually. When we talk of investigations, it's like if there is any investigation is on under non-compliance of FEMA or because of the regulations under FEMA, and the process is on, adjudication is on, or something is happening, right, for violation of any of these provisions of FEMA, whether these entities can apply for ECB, yes, they can. They can raise ECB as per the applicable norms. Otherwise, if they are eligible in all other parameters, which we have been discussing now. But what happens? They will be giving about the details of the pending investigation also to the AD bank, and the AD category 1 bank will also, this will be informed to RBI when they get this approval, and wherever it is required, the LRN, and everything will be on. But that will be about approving this proposal. At the time of approving this, AD and RBI, if it is under approval route, then we'll have to intimate this to the agency concerned, which is carrying out the investigation on this company. So, to put it in a nutshell, yes, they can apply for ECB, but the investigating agency should be informed about it by the AD or RBI, as the case may be. This is one. So when we talk of restructuring, like it's about the companies which are under restructuring scheme or insolvency, corporate insolvency resolution process is happening. Can they raise ECB? Yes, they can also raise ECB. Actually, these borrowers have already taken rupee loans domestically, right? They have failed to repay. They are under SMA2 or NPA. That is the reason it has gone up to IP and all that. So they can avail ECB under OTS with the lenders. It is allowed, right? And lender banks they are also permitted to sell this through assignment or anything, like this loans, the receivables can be also assigned to the eligible ECB lenders. But what we need to see is no other norms, rules, regulations will be violated here. The all-in cost, the MAMP, and any other norms as per the ECB framework has to be adhered to. Who can be the lenders? Who are all the identified and recognized lenders can be there, but excluding the Indian banks branches who are situated outside India. They will not be able to participate in this type of lending. And very important is that favorite of our Dr. GKR is MAMP. We need to ensure that MAMP is complied with, even in this case, right? So
you are sorry, madam. You are highlighting about the intimation to the investigation agency about the development.
No, these are two things. One is investigating agency over.
First part, the intimation. With that intimation only, the process should go. Without intimating, it should not go. That is the first.
That can be done. That can be considered.
Yes.
Any corporate borrower who is under some investigation or the other, due to non-compliance of FEMA guidelines and things like that, it can be informed to them and it can be done. They can borrow, apply, no problem. Second part of the question is about restructuring. So when I talk of restructuring, the entities which are under restructuring, so this will be for the entities which are under restructuring scheme or corporate insolvency resolution process. They can also raise ECB. When, for what? Like their account is an NPA, the borrowing, whatever is the facility that they have availed locally, it's under SMA2, and that repayment has to be done to the local lenders. That can be done by way of getting ECB. That is allowed. And for this, the lending bank in India will have to assign the receivables, right? They'll get it and they'll close this dues here locally, and only ECB is going to be outstanding. Only condition is all the terms and conditions of ECB framework has to be complied with. That's it.
So very nicely, with respect to the first part, transparency about the intimation to the investigation. With respect to the second part, compliance with all the terms should have been compliant, so as to take it forward with respect to the restructuring process. Okay, ma'am. Now, Dr. Raju, I have got my rupee denominated ECB. Can I raise a fresh foreign currency ECB to repay the rupee ECBs? Simple. I very taking it. I borrow to repay. Borrow in foreign currency to repay in the INR ECB.
So there is a concept called LECBs and UECB. So you already borrowed and you borrow from another party to repay the existing ECB. So that means you are only, for example, the original ECB is for a term of 5 years. And when the 4 years is over, you again borrow from another party and you extend that at the end of 4 years to another 5 years. So does it look like a permitted transaction? No. So therefore, if it is a U transaction, that means you borrow to repay an existing ECB, it is not a permitted transaction. Now, L transaction. Now, what is L transaction? There is a rupee borrow here in India. I borrow ECB. Can I do that? It is possible. It is possible both for working capital loan as well as for a term loan. So, if it is a working capital loan, the MAMP is 7 years. If it is a working capital loan, the MAMP is 10 years. That's the only difference. Now, interestingly, they have extended the period for. So that means you can convert a working capital loan to a term loan. That is the logic here. Or a term loan to an ECB term loan. That is possible. So term loan to term loan, working capital loan to term loan permitted. Only difference is when you are converting working capital loan to term loan, 10 years. So these models are there. Now, in between, there is one more interesting thing. There are NBFCs. They are called as on-lending. So I don't borrow from abroad. I go to, because I don't know anybody investor there. I know 9,000 licensed NBFCs in India. I go to local NBFC, Muthoot Finance. Muthoot, they have so many friends in UAE and GCC countries. They say, don't worry, I will borrow from there. I'll give you lend. So this is called on-lending. Now, can that be considered as a working capital loan? It cannot be. Their borrowing will be treated as a term loan and their lending will be treated as a business loan. So that and this cannot be. So that means back-to-back lending will not be treated as an ECB. So we need to understand. So very important is what is the source, what is the end, how the source and the ends are met. So that has to be very clear.
Dr. Raju and Madam, time is already over. Another one or two questions. Madam, to you, one important question is, can ECB proceeds used by eligible resident borrowers for investment in their overseas JVs or that working capital or WOS as per the procedures ECB guidelines, investment guidelines?
See, these are two different, types of borrowings or investments, whatever. So when we talk of ECB, it will be under FDI, right? What do we say? Like in case of ECB, what do we say? Those entities who are permitted under FDI for foreign direct investment can borrow ECB. Okay, that's separate. What about the one who has borrowed? Can he use it for investing outside? That comes under ODI. So can it be utilized for overseas investment? Yes, it can be utilized. It's FDI is, I'm eligible to borrow as an entity who is eligible under FDI to borrow under ECB. And can I use it under ODI? Yes, it can be used as per the guidelines of overseas investment. So that's a different, separate avenue as such, totally.
Dr. Raju, you highlighted and observed about an on-lending, treating that as a working capital in the earlier question. We'll move to the Next question. Whether ECB raised under the earlier ECB framework be refinanced or partly refinanced through an ECB raised under the extant ECB framework.
So the only thing is we need to ensure that the new borrowing all cost, that is your prime lending rate, interbank rate plus 5.5%, that is 550 basis points. So that cost it should not exceed. So then it is permitted.
Okay, madam, there are housing finance companies, that is all there. Whether they can raise ECB for on lending to individual borrowers exclusively for the purposes of flats and apartment or units in the affordable housing project category are defined in the harmonized master list of infrastructure and notified by the Government of India.
Actually, the question has an answer.
Yes.
Right? It's like writing exams. Can the just remove housing finance companies can't raise ECB? Why? They are nothing but NBFCs
Yes.
whose business is into housing finance, like especially affordable housing, right? Projects. So they can borrow for on lending purpose. It is a permitted NBFC. It's allowed.
That's. Another question, Dr. Raju. What are the permitted derivative products for hedging of ECBs?
That is two things. One is natural hedging.
Yeah.
But natural hedging, they cannot say no. I will get export proceeds of no. Only up to 1 year only banker will consider.
You touched about this one in the earlier question itself.
Yes.
That's the point. Madam, can refinancing or partial refinancing be undertaken under the automatic route even for ECB's rise under the approval route subject to compliance with the guidelines? Is that possible?
Yeah, it is. It's a simple thing. It's idea is about again and again the compliance with the guidelines part of it. That has to be ensured.
Very nice. Very nice.
That's it.
Dr. Raju, in the light of the new framework, ECB framework, does the borrower need to file revised ECB form or not?
ECB 2 is a monthly reporting. For example, I borrow from Europe in euro some 1 million euro in the month of October. I have to file ECB 2. In the month of November, should I have to file ECB 2? Yes. Even if I don't borrow, I have to file ECB 2 because even though borrowing is not there, closing balance is there, interest amount is there, and I need to commit in that form what is my foreign exchange earnings, foreign exchange expenditure. That is my interest part. What is the hedging I have done, and what is the principal repayment schedule which is due, overdue, or yet to be due that I have to make. Similarly, what is the outstanding balance at the end of the month? And what is the money I have utilized? All these I have to fill it up and I have to get it certified. So the moment I come under the framework of ECB, I need to file this form called ECB 2 monthly. And if I make a delay in it, there is a late submission fee.
Madam, Dr. Raju observed in one of the for the answer, if the ECB rise is not utilized, pending utilization, it has to be kept in fixed deposits. Now, I'm keeping it for say 6 months or 1 year or whatever the period. The tenor is over. Once the tenor is, can I renew that, or what is the maximum period of such?
Actually, see, if it is in foreign currency, ECB is taken in foreign currency, it can be kept outside India as a fixed deposit till the day when you require the expenses to be made up. That's also allowed. Same way, even I availed it in rupee and I'm keeping it in a fixed deposit locally with my bank, and I want to just use it when I require it, right? No, it's permitted only for 12 months. As Raju has already discussed about it, it should be unencumbered and you cannot renew it. See, the purpose is not to earn interest. Like he had also mentioned some smart borrowers. You cannot allow all that. Idea is to not to let it go waste. So keep it in FD for a period of 12 months. That's it.
Probably as a layman, I understand the lending rate, the deposit rate in India, interest-bearing fixed deposit rates in India compared to global market is being more. There should not be any tendency to keep the park in fixed deposits alone and
That
the
is right.
interest
It is
income instead of
to-
not utilizing it.
It is to prevent arbitrage.
Yeah.
That's
Yeah,
the idea behind it.
That's the arbitrage is to be prevented, and the investment as planned should go as early as
To
possible.
go
As
for
far
the
as
permitted purpose. And
the entire ECB, I would like to ask Madam about one thing Raju can also supplement. There is an advantage in 4% versus 7-11%, whatever that Raju highlighted. Now, depending on the strength of the respective currencies in the currency market, certain currencies are becoming stronger, certain other countries over a period of time getting weaker. So the attraction is not rate of interest alone, other hidden costs like this fluctuation rates, variations, how to address that? Because if that is addressed, everybody will be tempted to go for ECB itself subject to other norms. What is the take for that, madam? The final question that is important.
Yeah. So can I take it this way? Your question is about the volatility in the rate in the
Yeah, that's the
stock
volatility
market,
of the currency.
how to
respective
protect myself. It's
Yeah, simple.
see, look at the market today. You were telling about like today, dollar is appreciating. Today's situation, dollar is appreciating because the rate of interest is going high, and the Fed has been increasing like crazy. They have increased, right? So leading to global recession, and because to arrest the inflation, everything there. Vis-a-vis dollar, every other currency has been depreciating. In that, India is safer because our depreciation percentage is much lower as compared to many other developed countries. It's not the forum to discuss on that.
Yeah.
So I'm stopping with it. Right.
Right.
So what do I do?
Yeah.
What can I do? I can hedge my payment. Today, I can hedge my if I have to, I'm the borrower and I need to make the payment. The hedging is allowed as per the ECB norms. We should go for hedging. So there again, we have, I think Dr. Raju has discussed about all that.
Touched about it.
Yeah, natural hedge and other things.
Yeah.
That's the only way. We should have a separate webinar on this. That's an interesting topic.
It's a topic by itself. Still, to make the viewers understand, because it may be working in their bank of mind, though the attraction is the differential rate parity, whether I will end up paying more at the rupee terms or volume terms, the hedging is the solution.
You never know. That is again, you never know. It's like, I pray. Some clients used to ask me, Madam, you said we have hedged and what's the use? It has become adverse for me. I'm not gaining much. They'll say I'm not gaining. Their idea is not losing, I'm not gaining. What I'm trying to tell people is it's like paying LIC premium. Yeah. I've been paying the LIC premium, but what's the use? I'm still alive. So that should not be the case, right?
Eventuality happens, it protects me. I will land on a bed of a soft bed, not on the bed of thorns. That's the point. Dr. Raj, anything to be supplemented on the point?
At the end of the day, ECB is attractive only when the rate of interest. Yeah, so that is the only one business case that attracts ECB. But the financial consultants, chartered accountants and consultants, they have a lot of responsibility to explain to the borrowers what is the other than the interest cost that is involved. So number one will be the legal cost because documentation is involved, bank charges, and sometimes pre-closure also is permitted. So when pre-closure is there, there will be a cost involved. So all this and the trend, what is the inflation, and what of course inflation is taken care by your exchange rate. So probable exchange rate calculations in the future, and all this have to be padded into the interest cost. And at the end of the day, they have to find out. That is why the all-in cost is a very important term. The all-in cost is
all-in cost.
Interbank offer rate plus 5.5%. So that means unless and otherwise your other cost doesn't exceed 5.5% per annum. If it exceeds 5.5%, even RBI doesn't permit.
Because it's available here itself. Why should I do it?
Oh, you are going there. So that
parity norm is 5.5.
5.5. So that is the catch. So if it is anything below 5.5, so that is why you have 190 countries. You can subtract the friendly and non-friendly neighborhood countries.
Non-cooperative.
We have 150 countries are there. So every day you watch every country, what is the opportunity, and try to catch that.
Thank you very much, Dr. Raju and Madam Lalita. It's we have raised against the time. Still, we could cover many questions in this particular series. There may, I think, only one question is there, Doctor. Can you take it up if there is a question, please?
Actually, I have only typed that question.
Yes,
sorry.
Nobody.
There are no questions. We'll call it a day. Thank you very much, Dr. Raju and Madam Lalita.
Thank you so much. Thank you.